Hello, everybody. Welcome. Let's get started. ACDC, how are you?
I'm good, yeah, man. Got about a half hour today. How
Nice.
are you?
Good. Did you watch the Super Bowl?
Yeah, I mean, it's a disappointment overall. I personally enjoyed the Chiefs finally getting beat. Um, I was rooting for the underdogs, technically, not by much, but I think they had enough Super Bowls. But just overall, I think everything was such a flop in terms of the game expectations, the commercials, the halftime, just a letdown in my opinion.
Yeah. Yeah. It wasn't. I mean, I watched it in Philly, so it's. It was a hell of a game. Like the final score doesn't reflect how much of a dominance Philadelphia Eagles had. It was pretty impressive, actually. Anyway,
So you have some roots to Philly, right? Is
yeah, I
that
lived in Philly for a long time.
yeah? Because you were there for when Elon was campaigning out
Right.
there too.
Yeah.
So were you in the city itself?
Yeah, I was in the city. I watched it in the city, exactly. And then we went out and everything. It was a fun time.
So did you climb up
Anyway,
on the light poles and how many
yeah,
cars did you turn over?
I'm gonna play the fifth on that one. This is a recorded space. Okay, let's look at the markets real quick. Dow Jones up 0.3%, Nasdaq up 1.1, S&P 500 up 0.7%. The chip makers are back. It looks like Nvidia is up 3-4%, and so is Broadcom, AMD, Micron, Intel, etc. Everybody else is mixed. Banks are down today. Healthcare is down. Oil companies are up. Tesla is was down like 2% in the morning, and now it's about break even. What's on your radar?
Did you just see Elon's repost? He just reposted Omar's FSD drive and recommitted to robotaxi launch in Austin by June and a couple other cities by the end of the year. That's why I think it kind of turned. I mean, it was already turning around the stock, but it kind of firmed up a little bit and will probably be positive by the end of the day.
Yeah, maybe. I mean, I still don't think it's going to be material, even if they do it. And let's just remember that we were supposed to have 1 million robotaxis by 2020. So I think the next 5 years is probably going to be just as disappointing for Tesla investors as the last 5 years in FSD and robotaxis and Optimus, etc.
Yeah, I fully agree with that. I mean, I have a bet with you, and I think that they will be able to do it, but on what scale? I mean, if they're literally just starting what Waymo had to do to get all the approvals and get some market traction and everything now, well, then if you look at the same path, it's going to take a couple of years, and they're not just going to start ramping up. They can't ramp up. So how much does that add to the bottom line, and how long does it take? And in the meantime, where is Waymo at that time, and where are the other players by that time, right? So yeah, I'm bullish on FSD, but that's why I think the valuations of the stock have to be set with realistic financial sense.
Yeah. I mean, Waymo began offering full autonomous rides in public in Phoenix in October 2020 through Waymo One. They've been at this for more than 4 years, coming up to 5 years, and they've expanded now to about a handful of cities, and they have another handful on tap, and they're already doing testing and mapping in those locations. So in a very short period, they're going to have 10 and then 20 cities mapped out, with flooded with autonomous rides. I would expect in the next like 2 or 3 years, Waymo will be at more than 20 cities in the US alone. And they're also expanding into, Japan. They're going to be in international markets. They have a partnership with Uber. Fleet operation side of these things is also nothing to kind of sneeze at. And they also have a backing from Google with a much better income statement, free cash flow, balance sheet than Tesla. Um, Can't even imagine at this point. So I just don't see how um, that I don't see how Google um, loses that lead anytime soon. So
I agree, and I think there's a lot of risk built into it because of that. I mean, we're just thinking that as if like this is going to be a flawless rollout, right? And it necessarily may not be. Did you saw the news yesterday with the post on the Cybertruck accident that
I
really took
did.
off early morning yesterday? I mean, that's
Right.
pretty huge, you know? I mean, how does a Cybertruck just crash into a light pole, going 30, 40 miles an hour and have significant damage like that, right, on FSD? And sure enough, everybody started attacking the guy. Oh, he was drunk. Oh, he was this, that, and everything. And actually, exchanged a
It's
couple
so
messages.
disgusting. I mean, I read those replies, and it's just so disgusting what this Tesla community has become. I like they some of these people make my skin crawl, and I kind of feel like, man, was I like that too a few years ago? It's really really disgusting to watch.
I mean, in my opinion, it doesn't help anyone. It doesn't actually help their investment. I mean, if you want to live in a bubble and just believe one way, then sure, I guess it does. But by not being realistic, by not maybe bringing that to the attention of Tesla AI to address it, it doesn't help anyone. I would like some of these influencers to actually, ask Ashok, ask Tesla AI, like, hey, can you justify this, or add some comments or shed some light to it, and that's what would be good, to get more visibility into it and maybe put a little pressure on them to add more safety parameters, along this.
Yeah, yeah, exactly. What do you think about Tesla Energy? A lot of times people will say, look, but look at energy; it's growing profitably.
So honestly, that's probably my weakness about in terms of the stock's evaluation itself. I've never paid more or so much attention to it, just because of this such a small component that it adds to the actual bottom line. I know it's growing well, and it's growing, you know, much more than the other businesses, but I just still think that it's such a small business. And I said this earlier and a few months ago, in terms of like it continuing to grow, at least in the United States itself, I don't think the demand is going to be there as much, as we are going to kind of like cut back on a lot of these regulations that were put on the utility companies on the because of climate change and everything. So the grid is going to kind of stabilize itself, and the use of the battery packs, which mainly were used for grid stabilization, are not going to be as apparent. I mean, in certain purposes and in foreign applications, foreign countries, it could see a continued use, but I just don't see it ever getting like to such a significant business, at least not yet, that I'm really paying that much attention to it.
Yeah, yeah. I'm gonna take a closer look at Megapacks um, in the next day or two, and then we can talk about it. Um, FSD communication tracker still shows a few hundred miles between critical disengagements. 97% of drives with no critical disengagements completed. So this is very much still as expected, and we should see a wider rollout of V13 sometime this spring, March, April kind of time frame. So FSD is progressing just as we had discussed a few months ago, despite all the tweets from Tesla AI and the shock and other AI employees and people saying, "Oh, it's not Elon predicting this time. It's going to be better this time," and it's just not. It's always the same hype, dump, and recycle. Um, we have the inflation data coming up tomorrow. CPI tomorrow. Sorry, CPI Wednesday And tomorrow we have Small Business Optimism Index. Wednesday CPI, Thursday PPI, and Friday retail sales. Any sort of expectations on any of that macro data, ACDC?
I don't see much really in the CPI. What do we see? 0.4 month over month in December. I think it stays somewhere around the same, maybe a little bit higher. Maybe CPI can creep up to 3 or so. That's what it's been trending up. But I really don't. I think the market, I mean, in terms of the market's, reaction to it is what I'm saying. Because I think the Fed has kind of spoken as to where they're going to be. And unless we see like a crazy change or something, I don't see much of a market reaction to it. Um, so yeah, I'm not predicting much. I don't think this is going to be as hot of a CPI report by either measure.
Yeah. Well, the oil prices have been, down. So, headline figures should be about point 0.2, point 0.2 to point 0.3. If point 0.2, then markets will probably move up. If point 0.3, markets may move down a little bit this week. And then the core PCE year over year seems to be stuck around 2.5%. Core CPI seems stuck around 3%. So I wouldn't expect much of a change based on all that. I don't think we're going to get a cut in March meeting, maybe in May. We'll see, depending on data that comes in. Luce?
Hey, what's up, guys? Maybe you already discussed about it, but have you seen the Lyft announcement about their autonomous fleet coming online in 2026?
I think I saw a headline: Lyft autonomous driving. Let's see. Lyft is working with other companies to develop autonomous vehicles that can be used in its ride-hailing platform. Lyft's goal is to make AVs available to millions of users. New round of partnerships. That's from November. Let's see. Lyft Eyes 2026 robotaxi launch alongside Mobileye and Marubeni. I mean, yeah, there's a lot of announcements. Tesla makes a lot of announcements on robotaxis and Optimus. Lots of predictions made. Other companies make their own predictions, but rarely these things come true. Whatever company you speak of. But the fact is, Waymo has already scaled to a handful of cities, including now Austin. They have Atlanta next, and then Miami, and they have their Uber partnership in multiple cities for the fleet operation side of things. And I don't see how, like with the $5 billion raised from Google and tens of billions of dollars on Google's balance sheet, I don't see how that doesn't accelerate in the next 2025, 2026, 2027. And by the end of 20, I say by 2027, I would expect to see Waymo plus Uber partnership in 20 cities. So at that point, Tesla doesn't really have a chance of charging economic profits that people think of, like trillions of dollars of revenues, etc., that Elon talks about. It's not going to happen. Luce?
I also wanted to ask to you, Yaman, but also to AC. What do you think about Uber? Are they really gonna be successful in the future? The people are just gonna use whatever app, Waymo or Tesla or whatever.
I think it depends on how many autonomous vehicle service providers there are at scale. So if it's just Waymo and Tesla, I think Uber may have a difficult time here. But especially if it's just Waymo, then Uber is kind of done. But if there are multiple players, like a dozen players, Waymo, Tesla, Zoox, Lyft, or whatever, a bunch of others, which I think that might be the case in the future. I think that we might actually see several players on Uber network, and at that point, I think Uber may have a better chance of becoming a valuable business. I mean, already is today. It already generates a ton of free cash flow. Blackman just took a major position in Uber. and I can definitely see why. I don't think Uber is as dead as Tesla bulls wish to believe. Um, and we talked in this space too that it's become a bit of a undervalued business. Trades at 17 PE ratio, $164 billion market cap, and global operation. So I wouldn't be surprised if Uber continues to appreciate in value. ACDC.
Yeah, so I completely agree with that. I think people fail to see what Uber has established over all these years, and that is the value of their network. If you look at the company's model, they don't own the cars, they don't employ the drivers. It's a really low cost model. And then when people think that, oh, it's just the Uber app, like, okay, Tesla will have its own app. Well, that app has no value unless it has millions and millions of cars on connected to that app. So the only way Tesla gets to that is if they have enough robotaxis connected to the app and roaming around, which is something possible, but years and years out. In the meantime, Uber is playing it safe. They already have these drivers all over the country in their network. And if autonomy starts becoming scalable, whether they're using Waymo or it could also be Tesla's robotaxis itself, they can just plug those into those network and capitalize on that. So Uber is in a great position, and I really don't see it going anywhere. Their profitability model is great.
Okay, ACDC, you said you have about 10 more minutes to go. Any comments on Trump tariffs, 25% tariffs on steel and aluminum into the United States from Canada, Mexico?
Yeah, so I said this like about a week or two ago. You know, this isn't about really anymore about negotiations itself. His tariffs are going to be here, and I think these tariffs are going to stay. He's trying to bring manufacturing back. He's trying to uphold American companies, American enterprises, and it's everything that he's going to do is going to be promote that. So if you saw this morning, you know, the steel companies, and he's already said this before, you know, like it was with United Steel when Nippon was buying United Steel, right? That he doesn't want the largest steel company in the United States to be owned by Japan. And everything that he's going to do is going to be to help. And it's going to have some hiccups, definitely. It's going to raise some costs initially, but I think him, Elon, and then now the market is also starting to agree with it and not see tariffs as a complete negative. If you see the reaction, look at what we're seeing in the market today. We're up in the market today on these reports versus the 700-point sell-off last Monday on this announcement. So I think the market's ready, and they're seeing the long-term benefits of this, and I think that continues.
You know, I have a different explanation for the market's reaction being up. I think that market kind of got used to him talking and then talk, um, you know, walking back. That I don't think the market is pricing in the effects here too much.
So you think he's going to walk back these tariffs?
Well, the history shows that is the pattern. So I would maybe expect that to be the case going forward as well. I mean, if you look at U.S. steel, up 5% today, but in the last 6 months, down 5%. The company has been basically flat. So in the last year, even, it's been flat. So, I mean, you would think, eliminating your competition to this extent, 25% would lead to the stock surging, but that's not what's happening. And then what's the other company? U.S. Steel and
Cleveland Cliffs.
no, Alcoa, right?
Alcoa is the aluminum manufacturer, right?
Yeah, and then they're up 3% today. In the last month, 3%. In this last 6 months, 19%. In year to date, flat. So ever since they started talking about these tariffs, it went up and then went down, and it's now back to where it was at the beginning of the year. So I think the market, I mean, we're not seeing any change in yields either. They're basically flat today. It's already a low kind of volume type of day. So um, I think the market is completely ignoring, just like the Fed is, all the negotiations until something happens. Something is inked on paper. That's my take on
All right, let's do a coffee bet.
it. I'll think about a copy that, and then we can talk about it. But yeah, I just don't see how tariff wars are good for markets. But I think it may be good. They may be good for certain companies here and there. But overall, I think long-term potential growth of the country and the world is reduced by tariff wars. Anything else you want to talk about?
Just on that same token, I actually posted this on Cleveland Cliffs, which is the other steel company. So Cleveland Cliffs was going to buy United Steel when Nippon came in and made an offer on it. So this is surprisingly a company that Gordon Johnson actually follows. So I actually gave him some props on this morning. On January 7th, he had released, and I've kind of followed him a little bit because he followed this company, and I've been following United Steel's, Cleveland Cliff, Freeport McMoran, among some of these Steel Dynamics, among some of these players for a while now. And he called it in his research report that the Trump tariffs are going to be a positive. I think the stock was at $10. So his call on this at least was right, and it's up 20% since then. So I just gave him props and said I wish he talked about other companies as much as he talks about Tesla.
Yeah, yeah. I think we can probably learn from that advice. We can all learn from that advice. Okay, a couple other headlines. Chinese automaker, Chinese auto market is slowing down the total size of the Chinese auto market, so including ICE, hybrid, EVs, etc., is slowing down, and some say no longer growing. Autoline video said no longer growing. So that means, to the extent that some of the makers were, including Tesla, was losing market share, but had the tailwind of a growing market and still showing on an absolute basis growing sales. I think in the future, that tailwind is not going to be there, and the automakers who are gaining market share is going to kind of prevail over the ones that are losing market share. EU is pushing out emission regulation ramp up down the road, so they're kicking the can down the road. So that eases the pain of Volkswagen, Mercedes, BMW, and others in Europe in terms of billions of dollars of fines they would have to pay otherwise. And NIO is about to break even with its battery swapping business. They have apparently more than 1,000 locations in battery swapping. And they may actually make it work, because if you think about it, even Tesla's supercharging network is kind of break even. They're not making any money off of it. So the economics of it seems to be on par, which is amazing.
So I watched a Kyle Connor video recently, and he talked a little bit about the NIO battery swap. And he admitted that, as absurd as it sounded to him when he used it, it was great. He said the battery gets swapped in 3 minutes, and from a user standpoint, it was very practical, and it felt just like basically a gas car getting a full tank of gas. So
yeah, and obviously in an autonomous future, those locations would come handy as well, as opposed to charging the vehicles. So a lot of things that I thought wasn't going to work, like battery swapping, or lidar, or HD mapping the cities, are the things that are working today in 2025. So something to keep in mind when other claims are made. All right. ACDC. I think that's it for today. I'm just going to read a Reuters article, and then maybe if Chris is available, we can do a subscriber on the space for the subscribers, and then half hour every day should be. I'm gonna dig into Tesla Energy. We can talk about that tomorrow. And any other news, Luce?
No, regarding tariff, I also had another question for you, Yaman. What do you think is going to happen with Taiwan specifically?
Oh, I don't know. It's not my area of expertise. Geopolitics is not my area of expertise. So, but I don't think it's going to matter that much. Anyway, let's see. Man, ACDC, am I thinking about this correctly? So Tesla's gross margin, other gross margin, excluding credit sales, regulatory credit sales, according to Troy, was 13.6% in Q4. 13.6. This is down from 30% in Q1 of 22. And it's a very consistent decline. And we don't even know if the worst is behind Tesla, but Q1 is going to be very low deliveries. We're talking maybe like 370, 380,000 deliveries. And if this, so am I thinking that's correct? If the $7,500 credit wasn't there, I mean, it almost looks like Tesla's gross margin might have been negative, like Rivian.
So the gross margin was like at 14, I think.
13.6 for Q4.
For Q4, but before that, I think in Q2 it had dropped to 14, and then in Q3 it went up to 17. I remember that was like the silver lining of that earnings report, and the stock went up after Q3 earnings. And this time it dropped back even below Q2, and it was like nobody, batted an eye on it. So I think it's a significant thing to look at. Plus, with all the promotions and everything that they did in the fourth quarter, it's definitely going to come down lower.
But just kind of like, but specifically, if the EV credit wasn't there, which obviously allows Tesla to charge $7,500 more, or at least several $1,000s more for its vehicles in the US, which is about half the deliveries and whatever. And other countries have similar programs. Without these government programs, and specifically $7,500 EV credit, which is at risk of going away, would Tesla have a negative gross margin?
Well, so you'd have to look at it, right? I mean, the prices right now, and I know for the Y at least, they're clearing out the inventory, so they've really lowered the prices. These are the lowest I have seen Model Y prices right now. You have to look at like what do you think they would drop it to? I don't think they drop it to 7,500 by 7,500.
They wouldn't drop 7,500 because they can't really afford to do that. But let's say they drop to that, and also like not everybody qualifies for 7,500. But let's say they drop to $3,000-$4,000. That's 10% of margin right there. And then on top of 10%. That, yeah, and then on top of, because the ASP is about 40,000. And then on top of that, you have you're going to be able to sell less deliveries. So your higher, fixed costs are going to be allocated over fewer unit sales. So your fixed cost per unit is going to be higher, and which is in gross, cost of goods sold. So, and then on top of that, by the way, Tesla gets $1,000 in manufacturing credits. I mean, Tesla got $1.4 billion in manufacturing credits in Q4. So it looks like the auto business is just as unprofitable as Rivian's R1 business.
I think you're looking at it correctly. Yeah. These margins are on the brink of going red to deeply red just on the basis of this.
Yeah. Yeah, that's wild. That's crazy. That's really crazy. Negative gross margin, excluding the benefit of Biden credits, basically, and Elon kicked Biden out of the office, essentially.
Well, and that's the thing that people don't understand, that, that's why it's never a good thing for the government to come into the private sector or elevate any one product. Because now, as a result of this, look what happened. Initially, it was great. They sold a lot of cars with the credit being introduced, but now they can never go back to that price again. And if the credit is gone, they have to further lower that price to match that. You know, and now you're in the red. So
Yeah. So did Biden make Tesla profitable, not Elon then?
yeah, I guess there's some positive that came out of that.
Okay. Luce, anything else?
Yes, beside the tax credit being removed by Trump, I think a huge impact has also been Elon involvement in politics. At the beginning, nobody wanted to believe that Elon was going to be hated and sales will drop for that. But I think at this point there is enough evidence that
Yeah,
this
there's a
is
lot of
happening.
evidence. Yeah, exactly. I mean, I don't think Trump is going to. I mean, I would be shocked if Trump got rid of the $10,000 credit, just because without them, Tesla may not survive. So I don't think he's going to do that to his biggest political supporter. All right, let me
Yeah,
go
man.
ahead. This is
I actually disagree on that, because that would be the most hypocritical thing for him to do when he's been talking about cutting the subsidies, and he's been calling out, all the unnecessary spending because of the green initiatives. So if he does that, that would be, I would be surprised that he
well, he hasn't done it yet.
doesn't. I know he hasn't, but I think that happens, and I think Elon expects it and is okay with it.
Why hasn't it happened already?
I think it's part. I thought, okay, so this is where I think some people have highlighted that since the IRA credit was was part of a bill, it has to go through the Congress. So that's why it hasn't been done yet by an executive order. But if it's something that he wants, it could be pushed through the Congress.
No, I think with the executive order, people were saying that he could increase the or lower the limits, under which people qualify for the credit, essentially making most people not be able to qualify. So he hasn't done that yet. And I think it's because without those credits, Tesla would drop a lot more. Like Tesla's deliveries would drop a lot more. Tesla's profitability would turn negative. Its gross margins may turn negative. So, I mean, at that point, you're worth as much as a Rivian, basically, which is like $10 billion. So I would be shocked if Trump does that to his primary political, money bag, basically. Okay, I'm going to read this Reuters article, and then we're going to switch to the ACDC. Thank you very much for sparing half hour out of your day. Appreciate it, and Lucha as well. I'm going to read this, and we're going to close these, and then the recording will be out for people to listen to it. Wall Street advances, tech stocks rebound. Trump tariffs lift steelmakers. Wall Street's main indices rose on Monday, with most heavyweight technology stocks rebounding after a steep fall last week, while steelmakers surged after U.S. President Donald Trump said he would impose additional tariffs on steel and aluminum imports. Trump's latest trade escalation came on Sunday when he said he would introduce 25% tariffs on all imports of steel and aluminum into the U.S., on top of existing duties on the metals. There is still underlying theme that people want to be invested in tech stocks and AI, said Dennis Dick, equity trader and market structure analyst at Triple D Trading. Those stocks continue to get bought on dips. They continue to outperform overall. Heavyweight technology stocks fell sharply on Friday after Trump announced reciprocal tariffs on all countries, matching the tariffs levied by them. 2 weeks ago, the stocks were hit by the surging popularity of Chinese startup DeepSeek's cheaper AI model, and amid increasing scrutiny of the billions US tech giants have spent developing the technology. The Van Eck steel ETF jumped 2.6%, and with steel producers such as Cleveland Cliffs advancing 11.7% and US Steel gaining 4%. Aluminum producer Alcoa was up 2.3%. US Steel also got a boost after Japan's chief cabinet secretary said Nippon Steel was considering proposing a bold change in its plan to buy the company. Some earnings-driven moves also aided Monday's gains. McDonald's jumped 5% after the burger chain posted a surprise rise in its global comparable sales in the fourth quarter. Rockwell Automation gained 11% after automation products maker posted a higher-than-expected profit for the first quarter. Coca-Cola, DoorDash, and health insurance CVS and computer networking equipment maker Cisco are some of the prominent companies set to report results later this week. Later this week, U.S. Fed Chair Powell is due to testify before Congress, while a January consumer CPI index reading is expected to be released in the early hours of Wednesday. And that's it. Thank you very much, everybody, and I'll chat with you all next time. Take care. Subscribe on the spaces. Start now.